All right, guys. All right, Smart Money Gang. What's happening, man? What's happening? Y'all already know, man. We back live and we own these charts, man. So I hope y'all guys took advantage of the pre-analysis, and I hope you guys took advantage of the technical Tuesdays. And I hope you guys like this type of information, because for me, I just feel like creating a bias for you guys and trying to show you guys numbers and which points to stuff to look at ahead of time. I think that should help your trading out tremendously, and for the free, right, guys? I try to go in as much detail as possible within the little 10-minute time zone that we have with each other. But y'all already know what it is, right? So we're gonna finish off on the baby pips, man. We're gonna finish off on the babypips.com. I think we graduated, man. I think we in kindergarten now, man. So I'm about to do this whole breakdown with you guys. As we know, man, I am not a financial advisor, so I cannot tell you what to do with your money, how to spend your money, where to invest your money. All I can say is I'm a mentor. If you feel that you're ready and you've been practicing on the demo and you feel like, okay, you want to move to the next step, like put money on your real account, right? And starting out your career, right? Then at that point, try to seek mentorship. I'm not asking you to seek mentorship with me if you don't want to. Me, I'm more so for like the beginners, the small accounts, the small people. Then we can get off into getting funded and all the type of good things like that, right? So you can become a funded trader, right? Uh, so it's all different types if you don't have the right capital. But what I specialize in and what I feel like why I go hard at is just understanding right from the beginning, like just understanding, actually getting the proper knowledge, and then actually, making that initial investment, guys. But anyways, man, I'm gonna start the screen. I already started the timer, so I'm sorry for cutting it to you all the time like that. But yeah. I think we're in kindergarten mode. Uh, I don't know what that is. But anyways, right. So I think we in kindergarten mode. So we're finna go to Forex Brokers one-on-one, right? So we're gonna click on there. And you know what I'm saying? This is like the beginner mode still, your Forex, how to choose a Forex broker, how Forex brokers work. Is the Forex broker a legit company? So you guys, you have regulated brokers and unregulated brokers. Basically, that's what this whole section is, right? It's very important, but I'm not going to go over that all the way. And so basically, like legit brokers, they be trying to say basically like they're unregulated brokers, and then you have the regulated brokers where, you know, I'm not telling you which one to use, which one don't to, which one not to use. But me personally, uh, just make sure you look at the company and make sure you understand what this company is about. Do your research before putting your money on a site, right? When you do that, right? Period. So make sure that you guys understand the difference. So basically, they're saying licensed, regulated, and then what are actual trading and forex trading, CFDs. What are retail forex traders actually trade, and how forex brokers manage their risk and make money. B book brokers. Oh yeah, so you have B book brokers too, guys, and A book brokers, right? So we got the B book brokers probably unregulated, A book brokers regulated. Uh, how what to say? How a book broker make money? A book broker make money. Challenge a book execution, STP execution. How forex brokers manage their risk. Internalization. Why do forex broker B book? The hybrid model used by forex brokers. So it's basically like, guys, you got a new car lot and you got a used car lot. Then you got C book brokers, right? How forex brokers manage their risk. Know your forex broker hedging policy, right? And then where does the forex broker's price come from? And then what is the forex broker's order execution quality? Okay, so that's just a lot of stuff that we cannot go over. But the things that are very, very, very important is basically, okay, we can go over how forex brokers work, right? So once upon a time, two frenemies, Batman and Spider-Man, were hanging out. They just play too much on Baby Pips, man. They're lounging on the couch watching the movie Justice League, right? So whatever, Blase split. I'm not doing that, guys. I'm sorry. I thought I was, but I'm like, nah, I'm not about to play the games with them, man. So we'll go to next. let's see, Forex broker. So in order to trade Forex, you will need a trading account with the provider of online foreign exchange, right? FX trading or CFD trading services, right? More commonly known as the Forex broker or CFD providers, right? So who you open a trading account with, when you open a trading account with this company, you will need to deposit money to the account so you can trade. You can either do that or you can trade a demo just to see if you actually like the broker so you can look at the spreads and things of that nature. Me personally, I look at brokers as far as when I'm picking a broker, I look for leverage, guys. So I try to get leverage. And I can tell you how that can hurt you and how that can help you guys. So I look for leverage and I also look for low spreads, guys. And then like low commissions on like if you holding a trade, right? So I look for things of that nature. Also, I always look for feedback and reviews, right? Before I really choose a broker. I actually always know what's going on. So you guys know my broker, Cot Forex. I also use Prosperity, but Cot Forex, I also have a referral link that'll be in the description below that you guys can go ahead and tune in, chime in, and actually get, get down with the squad, right? So you can join the broker that I'm with. Uh, so boom. So a big issue with the retail forex trading industry is a lack of transparency and unclear regulated structure with insufficient oversight. So due to its decentralized and global nature, the forex market is less regulated than other financial markets, making it more prone to fraud, guys. So you just like I said, you just you gotta watch out, right? Because you don't want to go to some offshore broker that might just run off with your money and then boom, all your investment, all the money you've won and everything else is gone, right, guys? So just make sure do not get scammed, right? A lot of these other companies, you got a lot of companies like IM academies and things of that nature that try to tell you like, oh, you need to be doing this or you need to be with this or you got to do this way. Don't go on YouTube. Don't learn off this. Don't worry about that, guys. Listen, Forex is a real thing. The foreign exchange market is a real thing. Do not, and I repeat, do not get scammed. Do not sign up to these white book brokers or whatever they call white label brokers and people that be just lying, acting like they're bigger than what they are. Do not look at stuff like that. So with regulated brokers, more than likely you can do deposits and everything with your debit card and stuff like that. So like forex.com, Owanda, and things of that nature, you can load up with your debit card. So a lot of offshore brokers, you can load up with your debit card too as well, with the KYC. But more than likely you do your transactions with Bitcoin and things of that nature, right? Bitcoin, Ethereum, et cetera, et cetera. Now I was using Cash App when I was dealing with these brokers. Um, um, so so yeah, they showing you like, man, look up the location of your broker. You don't want a forex broker that look like this with this abandoned building somewhere offshore, Tijuana, right? But so more than likely, uh, so more than likely, guys, you can still load, but what I used to use Cash App until they started being crazy because I guess I was having too many transactions and your Cash App just was like, nah, you got too many transactions. So what I did was I started using uh why am I thinking about it like it just it brain fart Coinbase. So I started using Coinbase, guys. I load my money up off Coinbase, which is connected to my bank account, which I send it to Bitcoin, they send the address, then boom, I actually be able to load up my account. Haven't had any problems whatsoever yet. So, so boom, boom, that's that lesson. Baby pips is important, but it's a lot of stuff that you guys really can fly through. So is the Forex broker licensed and regulated? So is the broker licensed and regulated? Is the company licensed, regulated, authorized to operate as a broker where you live? So make sure, when you're choosing these brokers that, they're not saying like, okay, you only can use this broker if you not in the United States. You can't use this broker in the United States. So you got to look, like I said, do the research. Even you can find a lot of good ones that be cheap. You're going to got to put $1 in for a deposit. Just make sure, as I said and stated to you, that you're checking and watching for to make sure that they are a real company or a good company, right? So is the company licensed, regulated, whatever, you're live, where you live, right? So notice the extra emphasis on where you live. It's not enough to verify a broker's regulatory status, right? You need to know which regulatory agency it is registered, and rather the jurisdiction that the regulatory agency overseas covers the countries where you live. Okay, so that's basically the same thing I said. Make sure that if you're in the United States, use a United States broker. If if um if the broker can be used in the United States, then yes, use it. So this is like the FCA, the FSA, and all that. This will let you know the different type of regulations they have, I guess, right here. So this is very important. Make sure you don't skip over this. Make sure you don't skip over that. So the next one is, what are you actually trading in Forex? So basically, you're trading currency pairs, guys. You're looking for your you're trading the base uh you're trading the base against the quote, guys. So that's basically go over the same thing. Uh and so this is a very important section that you guys should go over and read and make sure you actually go through it. Um so this is what you're actually trading. Let's see, click on any pair. So this is what you actually trading. You're trading this is the base, which is all against JPY. So you would be trading and I believe we went over that. If it's going up, you're saying that odd is stronger than JPY. If it's going down, then odd is going to be weaker than JPY. Okay, so that is what you're trading. That is actually how you make money. All right. So, like I said, that's why I told you guys to go on baby pips. But at the end of the day, not everything might be for you. So, what is CDFs? Contracts for difference. Uh, a CDF is a traditional financial instrument that mirrors the movement of the assets underlying it. So, a contract for difference is an agreement between a buyer and a seller to exchange the difference between the currency price of an underlying asset and its price uh, when the contract is closed. So basically, it's when you actually put in a trade, when you actually place a trade or take the trade. Um, that is a CFD, and you're basically opening contracts, right? And you're saying, hey, I'm buying it at this price, and I'm gonna sell it high later on. Okay. Uh, so like I said, go over this long positions. You got short positions. A long position means entering into a CFD contract with the expectation that the price of the underlying asset will increase in value. I bet the price will go up from here. Okay, so that's exactly what I said. A short position means entering into a CFD contract with the expectation that the price of the underlying asset will decrease in value. I bet price will go down from here. Okay. So basically, look, guys, when you hear these type of words, oh, CFD, and people try to be all smart and be like, oh, trying to confuse you, you'll basically know what they're talking about. Okay. Going long. So buy, right? We got price here. We're gonna go for the buy, profit. And then if it goes down, you go for the buy, and it goes down, you had a loss. Same difference. You go for the sell, boom, you're in profit. You go for and you went for the sell, and then price goes up, then you're in a loss. Okay, so that is what that specifically means. So position value, and then you have margin, guys. So you always have margin. So that's when price, um, you enter a price at a certain value, you enter price at a certain value, right? And then price start going the opposite way of you. Well, you're going to have a certain margin depending on how much money you got in, depending on your leverage size, all of that, right? You're going to have a margin, and you can get margin call if your broker feel like price will go too negative and you might not have enough money to handle it. Okay, so basically that's what that means. The initial margin is the initial deposit required to open a position. The maintenance margin is the additional margins that require if your position gets close to occurring losses, that the initial margin and any additional funds in your account won't be able to cover. Okay, guys. So it don't want you to go negative, right? So you blown the whole account. It wants you actually to, stop. Let me stop you out, because obviously, you might not put a stop loss or something, and we're not going to take every bit of your money, but we're gonna We're gonna take it enough to hit margin. All right. So required margin 200, national value 10,000 up. And that's a 50-to-1 leverage. So I was talking about leverage, guys. So you got to remember that leverage is going to be a big factor when you're looking for brokers, because at the end of the day, we retail traders, we don't have that much capital, but it's plenty of ways to get capital. So don't worry about the capital when you first starting out. Focus on the actual talent, or actual the actual work. You know, focus on that work ethic, getting the right information, and actually understanding this, and you can go far as you want to go. So basically, you know what I'm saying, that sums that up, man. So that is a very, very important part of the section that you guys need to. And then where are retail forex traders actually trading? When trading forex, where are you actually trading? In the previous lesson, you learned that retail traders, forex traders, do not trade in the real forex market. If that's the case, then where are you actually trading? When you click buy or sell on your Forex Brokers trading platform, where do your orders go? That's what we'll reveal in this lesson, basically. Okay, so in order to understand where your trades go, we first need to understand where retail trade Forex brokers and traders like yourself fit within the FX market ecosystem. So basically, it's just like over the counter, guys. We're over the counter, and we're placing orders as our brokers are actually filling the orders for us. Okay, so they're gonna give you all this, a giant lake and all that crazy crap, and boats and stuff like that. I don't like stuff like that. And general trading venues are where different market participants can come together and trade with each other. When trading, no one of these islands trade venues, um, market participants must abide by the island rules. All right, they all the way with this island stuff, bad. Um, um, they be trying to make you understand, guys. So they just like break it down. A principal is a party involved in a contract. So as the buyer, you are the principal, and as the seller, the forex broker is also a principal. You trade as principals, and your broker trades as principals. When you trade with each other, it's known as principal to principal trading. This is why a forex broker is not really a forex broker, but a forex dealer. Uh, a broker is supposed to act as an agent on your behalf, right? Who simply brokers a deal between you and other counterparties, right? Principals. Or in other words, matching your order with a buyer and a slash a seller. So just remember, every time that you put in a buy, it's a seller for every buyer, right? It's a buyer for every seller. Okay. So just understand that. Uh, so this is just something that you definitely need to go ahead and look for. So look, like I was telling you, that's because the FX market is an over-the-counter market, okay? In the OTC market, there is no third party available to step in and make sure you receive the money owed to you. Think of a OTC transaction like a face-to-face transaction, such as a transaction is arranged and prices are negotiated by two parties, a buyer or a seller. Okay, guys. So just come through here, read this, get this information, lock it in, man. So how forex brokers manage their risk and make money. A lot of retail traders have no idea of how an order is processed, or how forex brokers or CFDs providers really operate. This lesson is intended as an introduction to mechanics behind retail forex trading. It is aimed at forex trading wishing to gain a practical understanding of how forex brokers manage their risks and make money. The trading process is not always transparent, and there are multiple ways in which an order can be executed with different risks, right, associated with each other, right? So me personally, how I make money is I always manage my account, right? I look at my account not in money, but as percentage, guys. So when I say, hey, I want to make $1,000 today, I look and see if I got 10,000 in my account, and I say, okay, boom, I'm gonna bring my account up 1%. Okay, guys. So just look at the account instead of money. Look at it in percentages, guys. So if you bring your account up, okay, I bring my account up. I'm sorry, not 1%, but 10%. I bring my $10,000 up 10%, then I have $1,000, right? So by that being said, this is the game that you want to play. You want to play a percentage game instead of a money game, because then it'll sound too like unrealistic, like dang, you know. And if you want to make a certain amount of money, you know, you have to have a certain amount of money to risk, right? So we have what you call a risk to reward, guys. So the way we make our money is because we know we have a certain set, we have a certain set amount in our head of what we're gonna risk. So if I'm risking $30, okay, let's just put it like that, right? So I'm risking 30 bucks, okay? So I'm gonna risk this $30, but at the same time, right? My reward should be double that, triple that, quadruple that, right? So if I'm risking it and I got a let's just say I have a 1-to-5 risk to reward ratio, right? I'm already trying to get my account up. I'm already trying to get my account up 10%, right? I got $10,000. Let's just say I only want to risk 1%. So I risk 1% of my account to make that 10% up, right? So I risk or you know, let's just say I got a 3-to-4 ratio, right? So I'm risking that 1% to triple it, right? So let's just say I'm tripling. So I got a 1-to-3 ratio, rate risk to reward ratio, okay? I'm going to risk my 1%, which is $100. So that's what I told you. Don't look at your account as money, look at it as percentage. So you say, instead of saying, hey, I'm about to risk $100 on this trade, you're going to sit up and say, okay, I'm just risking 1% of my account, right? So now you're risking 1% of your account. And in order for you to risk this 1%, you're not just doing like a one-on-one. So you're just risking 100 to make $100. Then that, you know, that leaves you with 200. But at the end of the day, you risk that 100, all you made was 100. Now, if you're trying to triple that and you got a 1-to-3, you're going to risk that 100 and you're going to make $300, guys. So this is how you're compounding your account, growing your account and making money. Okay. This is exactly how you're going to make your money. Risk management, the proper risk management, guys. So with that being said, man, I'm going to end the video because I know I'm way over my time, and I know you guys probably not going to watch it the same way you don't come over here and read Baby Pips, right? Babypips.com, man. Do not be a stranger. But anyways, man, if you like this video, man, like, share, subscribe, tell a friend to tell a friend. And you know, like, this is almost one-on-one. I'm spending a lot of time with you guys on YouTube, guys. That's what I don't think you guys know. I'm really spending a lot of time on here because it's a lot of stuff on here that's not going to put you on game for real. And I have no reason to lie. I'm not way up here, right? I'm just a regular retailer trader, just trying to figure it all out as it come to me. Because at the end of the day, the market changes every day, every second. So you are not the number one trader. You're not the best trader in the world. Your one strategy is not just going to work for the rest of whatever. The markets are always changing up. You have to understand. You have to put in the work. You have to get on these charts and analyze all of that, right? You got to put in the work, guys. So you already know what it is. SMSFXmentors.com, man. And yeah, we out. I love you guys. Let's get it. Gang.